This could be the biggest week of the year. What's next? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, in what is being billed and what could be the biggest week of the year, as traders and investors and the street is waiting on Jerome Powell and the Fed, and what are they going to do? Okay. The bond markets have priced in rate cuts. Everybody's begging for rate cuts. And the big question is, why do we need rate cuts? I mean, is the economy falling apart? Are we in that start of that recession that we mentioned here weeks ago that other networks are now talking about a little bit? Or are we just worried about what the stock market does? I mean, again, there's a lot of things going on. And of course, it all goes down Wednesday at 2 o'clock Eastern when we hear what the geniuses from the glass tower have to tell us about the interest rate market and what their intentions are. Certainly, there are reasons to believe that they are going to cut based on the action in the bond markets, based on what's happening with the Fed funds rates. But again, I hear all these genius economists come on TV and say, well, we got to cut rates, we got to cut rates. And the big question is, why? Okay, that's what I want to know. I need to know why, when places like Prosper, like Cabbage, and all the other peer-to-peer lenders are getting 10 and 11% money, okay? And of course, they're reselling those loans to banks. I would like to know why the banks can pay more for the outside loans, but they can't loan to everybody else. Why there's going to be a liquidity issue. There are so many issues to figure out here, but it always starts with the ignorance and the lack of common sense that is delivered by our famous Federal Reserve, who is now going into their 107th year of failure. Okay, again, if you continue to like to see your dollar destructed and your currency ruined, all you have to do is to look at the best model. You can just look at the England central banking model that started in 1694. Okay, where we can continue to bail out those who aren't strong enough to survive, and those who decide to take advantage of the potential and the possibility that the Federal Reserve will bail them out when they bust out. Okay, again, I would like to have it where our businesses, okay, get bailed out by somebody when we make horrible decisions and make a lot of bad loans. But of course, I guess we're not bankers. But again, in the meantime, that is what we have to look forward to, and that has the potential to shock the markets. Again, we'll see how it plays out. We'll see what the tone is. This is going to be a couple of tiered announcements. It's first going to be the actual announcements, what will be said in the press conference, and what is the verbiage of the statement. So we'll see. I mean, again, but they've already, in my eyes, they've already lost correct credibility. I mean, of course, I never gave them that much credibility, but it certainly, since the big bailout in 08, I certainly have no desire to watch them work anymore. I mean, again, I'm tired of watching them bail out, too big to fail institutions that should be institutionalized. Okay, so we've got the, once again, we've got the continued battles on the political scene. Our great friend Bernie Sanders, who is worth millions, by the way, has never worked a day in his life, basically, except as a public servant that has 3 or 4 houses now. Where is he? Why hasn't he given his money back? I got to give myself a head scratcher there. But of course, he wants to copy the Venezuela model, okay, which is great. Let's have riots and a revolution here, okay. Again, you have to wonder, okay, about what goes on in the minds of these people. But more importantly, you have to go what happens in the minds of younger adults that believe that model actually works, when you just watched it collapse in front of you, okay? Again, the real problem with that model is that the upper tier steals all the money. So it never gets down. You know, you remember President Obama who said the money would trickle down to Joe the plumber? It never made it down to Joe the plumber. That's the problem. That's the problem with all these giving away free systems. Unfortunately, the money never reaches the people it's trying to get to. Okay, but in the meantime, they'll continue to talk about, you know, what's going on. But we've got some interesting things happening, you know, around. I mean, there's a lot of things with Facebook now getting into the crypto world. And of course, they're going to use some base currencies as like underlyings. You know, again, it's you know, Facebook has obviously a big edge and a big advantage to try to take over that world because of everybody that uses it. You know, they were under a lot of pounding last week and a lot of scrutiny over the information that they were giving up and giving away or selling. And of course, as we have said here many times, if you go on Facebook, you are the product. Okay, you are not. When you take something for free and you have to give up your information, you are not entitled, okay, to have anything necessarily protected. You are the product, and I believe that the big tech companies, as much as we hear this fretting about regulation, it is my opinion that they want to be regulated because they will raise the barrier to entry for any smaller startup who can never get in, okay? Because they've already violated every possible rule of privacy known, and not just Facebook, Google, all of them, okay? They've already done everything they're gonna do, so they've gotten to where they've gotten. They're now conglomerates, they're big, so they want regulation because it keeps the competition out, all right? Again, this is the backwardsness of our system. You know, you can go back to the AT&T setup when they broke up AT&T. You can go back to even the postage meter company, Pitney Bowes, when they broke that up and called them a monopoly. Okay, they could never get a competitor that could ever take more than 2 or 3% of their business. So again, more hogwash, okay, more BS in an industry, okay, is what they want. What we really need is more free markets and less regulations. Okay, I think that is what we're looking at and what we'd like to see. And of course, you know, it's amazing. We had a lot of talk last week or last couple weeks about Congress getting a raise. You know, they haven't had a raise, God forbid, they haven't had a raise for 10 years. Oh, they've only made $190,000 a year for 10 years with much better health care than the average American, with you know, with everything else that's going on, and they want a raise now. And of course, AOC, the big advocate for free. Oh, a $4,500 raise is like it's nothing. Okay, you know, I bet you if you went out and asked the average family on the street if they'd like to have $4,500 extra, they just might say yes. Okay, I don't know, but somebody who's making $50,000 a year or $40,000 a year, and they could get a $4,500 raise, might just say yes. And if you look at Congress and you look at the Senate, okay, and you look at, and this is not a left or right issue, they're all full of crap, okay, and they don't deserve anything more. They deserve less, okay. They already got the edge and everything else, and they already scam out most of the cash anyways. So do they deserve more? Okay, you tell me. I think they deserve nothing. Okay, believe me. It should go back to what was originally designed by the founding fathers, where the states are in control of their own destiny, and the federal government is to watch over. Not the federal government should be the great and powerful Oz, but they want more money? Really? Geez, they've done such a good job, especially since President Trump's been in there. They spent the last 2 years trying to get him out, okay, without worrying about the American people. Okay, without worrying about what their actual job is to get things going in the right direction to improve the lives of Americans. But again, that's just one man's opinion. I'm sure I'll get letters for that as always. But hey, again, I don't like either side of the aisle, but certainly in this case, the House is strictly a hurdle and a roadblock that is not going to do anything. And they're not going to do anything for at least 2 more years. And if President Trump wins again, they won't do anything for 6 years. And yet maybe we should give him a raise because, hell, it's only money. We just have to go to the printing press and print some more, and we'll just hand it right over to him. okay? But I think there's a couple interesting stories, and the drug makers, there's talk that they want to make them disclose price, okay? Disclose price on air when they do all these massive TV commercials. You can't go 5 minutes without something that either gives you better blood pressure, gives you better blood flow, takes care of sexual dysfunction. I mean, I don't know, in an hour of TV, you might see 20 drug commercials, okay? But they never say how much of this costs, okay? And so there's talk they want to make them disclose that it's $800 a month for your prescription. And I think that would be the way to make it go. I mean, I don't know what anybody else thinks, but I think they should have to disclose their price. To me, again, you know, it's shocking. You know, you hear about this great drug that's going to help you, and you go and you find out that it's, you know, A, your insurance company won't cover it. B, you can't afford it. So see, what good does it do? Okay. But we have all these things going on, but yet they don't want to disclose what the actual costs are. I think that becomes just, again, why can't you tell us what it costs? Okay. And then you can go from pharmacy to pharmacy. Okay. And they've got all these different coupon books, and by the time you get through, you don't know how bad you're getting screwed by somebody, okay? Because that's really what's happening. You can go get some free coupons if you know what to do. You know, so why not just say, here's the price, here's the deal, and that's it. Again, let the consumer have a fair shot at it. But, you know, again, that would be too simple and take away from those massive profits that these big drug companies steal. That of course the FDA is in their back pocket. Again, this is the things that we continue to, these are the problems that continue to exist when we look at things. And of course, nothing more serious than over 2.2 million Americans that are still in a negative equity position within their home, okay? Now, you know, if you don't know what negative equity is, it means you owe more than the house is, because with all the fancy mortgages that have come out over the years, there was one that gave you like 3 payment options, okay? You pay the minimum, okay? You can pay the exact payment, you can pay more. In the meantime, when you pay the minimum, you are not paying down, you're not even paying down all the interest. So what happens is you end up in a negative equity position, okay? So basically, you end up in a position you can never get out. And of course, even with the rising home cost, they can't get out. Because so what's going to happen? What is going to happen? Okay, there's going to start to be defaults. Does this sound familiar? There's going to start to be defaults again. There's going to start to be problems. And of course, we will end up at some point in the same position we've ended up every other time markets have melted down. Now again, we are not telling you to worry and that the world is falling apart. I'm just saying that eventually these bubbles have to pop and we have to rebuild, but the markets will be up 8% year over year once they get back on track. So again, don't panic, don't puke out. If you're an investor, close your eyes, let the markets do what they do, and know that when you get up 10 years from now, whatever the time frame is, they'll be back on track. But there will be, obviously, this Keynesian economic theory is to try to put the recession off, can never really make it end until it just explodes. This is Bubba's Bottom Line. Todd Bubba Horowitz, great to be with you. And of course, I'm going to step out here for a break, and we'll be back with more of Bubba's Bottom Line. What's up, everybody? I did that great webinar on equity portfolios, portfolio management, our brand new product, and really a big hit, and we're doing well with it, and just getting ready to make a couple of big changes as well. If you'd like to check it out, hear the recording, just email me at bubba@bubbatrading.com. And of course, if you'd like to help our high school program, which would be appreciated, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back. It is Bubba's Bottom Line. Todd Bubba Horowitz with you on this Sunday, June the 16th. 55 degrees on Father's Day, and happy Father's Day to all you fathers. In the meantime, markets were pretty much sound asleep last week. Again, as we open the show up with, everybody's waiting for the Federal Reserve and waiting to see what they're going to do. But so the market's consolidated, very muted action, which is not a surprise. Now, if you look at where they're consolidating right near the top end, and it's probably a pretty fair shot that they are going to make new highs. Okay, again, obviously, if the Fed doesn't cut rates or doesn't indicate their cut rates, then the markets will fall apart. But based on everything we see, it looks like the Fed is going to give the green light. It looks like they're going to probably cut rates. And of course, that should propel markets to new highs. I mean, after all, the Dow is only about 600 points from an all-time new high. The S&P is only about 70 points from an all-time new high. The Russell and the NASDAQ might have problems getting there. It could be close. You know, the NASDAQ's about 400 points away. But at the end of the day, okay, you know, this could be the final push up. And again, we are long. We're staying long. We didn't get out when we had some selling. Again, our algorithms don't work that fast because, again, we don't want to get chopped up when you get into consolidation. But certainly, I think that there's probably one more push here. And then I think you might see the final curtain for a while. Again, I don't want anybody to think that I'm the old perma bear, that the markets can never go up. I think the markets will always go up, which is why I always tell investors, just stay the course. Quit looking at your iPhone every 5 minutes. Quit checking your portfolio every single night. Be invested. Don't be over-invested. Don't be over-leveraged, and you'll be fine. In the meantime, we have gold. I tried. It was amazing. Gold is on the upsurge, and with no doubt. And we actually called it on this show a couple of weeks ago that it looked like it was about ready to take off. And it looked like Friday was going to be the day. It looked like it broke above that 1350 level again, okay? But by the end of the day, it had come all the way back down underneath that resistance level. But it looks like 1400 is probably coming. Now, I think you get through 1350, and I think we do make a run. Again, I'm not saying it's going to happen tomorrow. I think that what it looks like is we're going to start to head higher, and it looks like we're more in a bull trend. Silver is still relatively weak, especially in compared to gold. Now, again, the ratio is getting way too wide. We're seeing prices had not seen for quite a while. I would suspect that silver will take off at some point here, but it's hard for me to get excitingly bullish about silver based on the fact that it can't even get back to resistance, let alone get into a new near-term high. So we'll continue to watch and keep you posted. And of course, crude oil continues to get pounded. And I think there was some very interesting tells we saw last week. And one was when we had, I think it was Thursday morning, we had the tanker attack. And of course, oil spiked about 4 or 5%. But by the end of the day, after getting to close to 54, it was back down in the 52s. And what that tells you is that the first burst was just a fear build, okay? But when cooler heads prevailed, oil came taken down. To me, we're looking for oil for the 50 level and then below, okay? For me, I think oil is going significantly lower. I see no reason that oil should go higher from here. We're producing already a ton. There's already a major oversupply, and interestingly enough, we are producing more each and every day. So I'm not worried about Iran and what they do. In fact, I think Iran better worry. I had actually thought there might be some military action there this weekend. Of course, the weekend's not over yet, but I would have thought there might have been some action taken there, and there still might be. But again, the big deal here is we don't care about OPEC. The crooks from OPEC are not a part of our equation. The big Aramco deal doesn't mean jack, which is why they keep putting it off. We make enough oil. We're the biggest producer in the world. We don't have to need their oil, okay? So we're not worried about that. I think it was a great week for the grain markets. Wow, okay? Now that was, again, they had a very bullish report on Monday and spiked overnight Monday and then fell apart Tuesday. But it was interesting that they did come back. Now, I think Friday might have been a little bit of a final blow off. Now, again, we're very bullish the grain markets, as you hear when we talk about on Bubba's Daily Update and tell you that we're buyers. But also, I do believe that for the health of the markets, you should see some pullback and some selling. So I think that I would be looking for a little bit of a sell-off. Now, again, I'm not looking for a disaster sell-off, but I think a 20 or 25 cent sell-off in corn would be no harm. A 20, 25 cent sell-off in wheat would be no harm. Soybeans, they're still kind of churning, but they should look to break out. I mean, I think there is a good chance or an outside chance for a big market this year, okay? And maybe going into next year. So again, big market. I would not be surprised. I'm not predicting that today, but I would not be surprised to see a 5 handle in front of corn and a 6 handle in front of wheat, okay? And maybe a 10 or 11 handle in front of soybeans, okay? So again, I'm looking for reasons, for areas to buy. I think the markets look solid. We're long, although we're short in one short-term account, but we're kind of mixed and split. But in the meantime, I look for higher prices, but I am looking for a pullback. I think when you look at the meats, they've been a little bit touchy here, but I think that, again, we're seeing more of a bottoming process. And what I mean by that is, although we're really in the dregs in cattle, fats and feeders, they both have continued to kind of maintain a higher low basis here, which is kind of bullish in a way, but again, they do need to break out. They do need to get above that resistance level. So we're still in, not very comfortably so, but we're still in. But on the other side of the coin, as much as the networks, when they have me on, want me to talk about how I should be afraid of hogs and how there's going to be a shortage and we're going to the moon, each and every time I get on, they go lower, and I keep telling them, look, price action determines everything. And the price action is not telling me that we're going much higher. The price action tells me that if we don't hold where we're at right now, we're probably going much lower. So again, I think that this is why you have to be very careful if you try to play the news items, because news is meant to create reaction, okay? It is not accurate. It is not told properly. And by the time you get it, it's already been played out in the market for days, okay? So again, news that'll affect the market shows up in the tape before you and I ever hear about it. That's why you need to learn to look at the tape and understand that the markets are giving you a message saying that's just like the markets last week, the very weak consolidation in the general equities is saying that they're waiting for a reason to make a much bigger move, okay? So we'll see how that plays out. And of course, the bond markets continue to charge higher. Again, it's something I haven't seen for, since 08, 09, when bonds just kept going up and going up and going up. And, it means interest rates are coming down, coming down, coming down. And we've been longing the bonds. We took our beating when we're short way back and turned around and have now obviously nicely recovered and continue to charge forward. Again, this will be something that'll, it's telling you that the Fed is probably going to cut rates. Remember, the bond market is the biggest market in the world, okay? By 20 times. It may be that's the fixed income market. It may be the biggest market than all other markets put together, okay? So again, it continues to push. So again, it's not for us to get in the middle of it. It's for us to try to follow it and put ourselves in the best position. And of course, the cryptos continue to move higher. Again, we peaked up a little over 9,000. Now we're right down a little bit, but again, look really solid. Facebook's getting in. Blockchain. There's all reasons to believe that they're going to be real. As I've said before, I would not take my last money and put it in there, but I'd certainly have some money in that I could afford to lose because it looks like it's the real deal. Meantime, this is Bubba's Bottom Line, Todd Bubba Horowitz. We're going to stop out for a break. We'll be back with my commentary right after the break with Bubba's Bottom Line. What's up, all? Listen, again, I did a great webinar on equity portfolio management. Kind of ties into what we did with the futures. And of course, the futures, by the way, if anybody's interested, I've got 4 open spots. A 20% return last month wasn't good enough for 4 people, but I have 4 open spots if anybody wants to come in. Otherwise, that's the limit. That's all I can put out there. But the equity portfolios are great. And if you want to check them out, I'll send you a recording for free. Just email me at bubba@bubbatrading.com. And of course, don't forget our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz. Of course, every week I give you a little bit of what I'm thinking. And of course, first of all, and this is a gambling commentary anyways, but St. Louis Blues, you punished Las Vegas, good for you. Nice comeback. I believe at one time it was 250 to 1 at one time. They won the Stanley Cup. And again, I didn't think they could win it after they lost game 6 and looked so lethargic, but they did. But a lot of interesting developments as you may or may not know. Gambling is technically legal in all 50 states, according to the Fed. Now, each state has its own decision afterwards, and some have approved, some have not. But of course, the idiots at the state levels, they want the bookmakers to pay more than they actually make as a tax, okay, which is totally ridiculous. But I'm hearing some now stories, out of some of the casinos that are open throughout the country, that they're eliminating the really sharp players, okay? Now, again, I have to wonder about an industry, okay, that wants to eliminate, there's some professional gamblers out there. And when they're professionals, these are not, sharp guys that you think are good. There's real professionals that make their living, and they make a lot of money betting a lot of money on games. If you remember the movie Casino, Lefty Rosenthal, okay, again, he made millions betting on games. In the old days, the casinos loved guys like him because they would get an idea for what the market was, just like trading. What's the market on a game? Okay, but there's talk that many of the casinos are trying to cut out the real sharp professional gamblers and not give them a place to play. Okay, now again, I don't understand why. It's still the bookmaker still has an edge, and don't you want that edge of having an idea where the player is going to be to know if your line is right for the rest of the betting public? So I think that's going to come down. I think there's going to be some much bigger problems there. And if they are allowed to do so, I hope they get torched and tortured and lose their business. Okay, it's happened, over the years. There's certain things that casinos continue to kind of take away from you. And it's not that they don't have a big enough edge as it is. It's not that the casinos are not big enough as they are. It's not like they have a lot of winners running away. So why wouldn't you want the edge? But again, I find the gaming industry becoming even more too much like a business, but really punishing the average guy, okay, who wants to go to Las Vegas with maybe for convention and play blackjack, because now on most of the table games that are on the strip, they cut the odds from 3 to 2 to 65. Okay, so again, they continue to increase their probability of winning more money from the average guy. They're charging you more money. So, and now they want to discriminate against sharp players. I think casinos, you're going in the wrong direction. I hope you deserve to get it stuck up your, and I hope that you do if you continue at this direction, because again, you've already got the built-in price edge. Why do you want to rob the average guy down the street? This is Bubba's Bottom Line, Todd Bubba Horwitz. Have a great weekend, everybody. As always, I thank you for being here. We'll see you here tomorrow with Bubba's Daily Update, and of course, next week with Bubba's Bottom Line. Happy Father's Day. Have a great weekend. We'll see you later.